If you trade Forex, you know the feeling. You're staring at shifting candlestick charts, trying to catch a trend as it starts. But by the time your gut tells you to jump in, the momentum has already swung the other way. Professional traders don't rely on intuition to enter the market. They use objective data to confirm their setups before committing capital. To do that, many rely on a specific, underutilized tool called the Percentage Price Oscillator, or PPO. It reads exact market momentum. Adopting this single indicator shifts your trading approach entirely. Instead of reacting to price spikes and gambling on direction, you start executing trades based on mathematical proof. Let's set it up. This diagram shows the typical indicator menu on your trading platform. Search for the PPO and verify your inputs are set to a 12-period and 26-period exponential moving average, along with a 9-day signal line. If this looks identical to the MACD, that's because the foundation is similar. But there is a crucial difference in the math. The MACD measures momentum using absolute pips. The PPO calculates the percentage difference between moving averages. This split screen compares the USD-JPY trading in triple digits next to the EUR-USD trading in decimals. An absolute pip indicator distorts the comparison. But look at the y-axis of the PPO panels below. Because it relies on percentages, it scales consistently. This levels the playing field. You can instantly compare high and low value currency pairs to see exactly which market has the strongest relative momentum. Notice the horizontal zero mark dividing the standard PPO panel. Crossing above it means the short-term average is higher, dictating a strict buy-only bias. Conversely, dropping below zero indicates bears are bear control. You only look for sell setups. Treating this zero line as a strict rule acts as your primary trend filter. It prevents you from fighting the market's dominant gravitational pull. Now that we have the broad trend direction, we need to find the exact entry. That is where the 9-day signal line comes in. This close-up shows the precise buy trigger. Enter the exact moment the main PPO line crosses upward through the signal line. The exit works the same way. A downward cross means momentum is fading, signaling your cue to close the position. By pairing the broad centerline filter with these microscopic signal crossovers, you isolate specific, highly actionable entry and exit points. Sometimes the trend loses steam before price drops. We catch this by looking for structural disagreements between price and the indicator, known as divergence. Here, the top price makes a new higher peak, marked by an upward sloping line. Below, the PPO indicator fails to follow, creating a downward sloping line. This contradiction reveals buying pressure has evaporated, warning that a reversal is coming. Recognizing divergence saves you from becoming exit liquidity, keeping you from buying in at the exact moment a trend runs out of gas. This chart shows a major pitfall. When the PPO line flattens out and tangles near the zero mark, the market has no clear direction. You must avoid trading these choppy conditions to prevent false signals. To increase your accuracy, wait for these PPO signals to align with physical support and resistance levels on your chart. And even in a perfect setup, shown here bouncing cleanly off a support level, you must place a physical stop loss right below the recent price dip. The PPO provides a strong mathematical edge, but strict, disciplined risk management is required to survive sudden economic news or unpredictable central bank shocks. Look at this completed chart. You have your centerline trend filter, precise signal crossovers for entry, divergence tracking for early warnings, and strict stop-loss rules, all elements working together. Using percentage-based relative momentum strips away the confusing noise of different price scales. It keeps your decisions objective and aligns you with the correct side of the market. Open your charting platform right now, add the PPO indicator to your favorite currency pair, and look for your first zero-line crossover. If you found this breakdown helpful, subscribe for more technical mastery and daily market insights.